Welcome back, and it's Akshaya Tritiya, and we have seen buying actually pick up in most part of India, at least the reports that we have been getting. Let's get in also a cue from Mr. Prithviraj Kothari of Riddhi Siddhi Bullion, who joins us on a phone line in Mumbai. Mr. Kothari, hi, welcome to the show. What is your sense? What is the kind of buying that we can expect in India for the day-to-day?
I think it's first Akshaya Tritiya auspicious day. I think is the buying is a huge buying is there, but lots of inventory almost the 2 weeks before it's almost done now. As people are buying the jewelry or maybe coins, but I think compared to the last year, and also the prices are comfortable on below the 29,000 also. So I think pickup should be slowly going on. Maybe compared to the last year, I think 20 to 30% drop down. Because now this year the equity market is going good, so lots of opportunity of investment there. But I think on the auspicious day, people are buying gold, so they buy in a less quantity. But slowly it's ongoing pickup.
Hold on, Mr. Kothari. We also are joined by Mr. Som Sundaram PR, MD at World Gold Council. Som, hi, good to have you too. What is your own sense? What is the kind of buying expected? Because most people on the street do expect 20 to 40% of a jump as compared to previous year.
Yeah, it's always we desist from giving any figures, as you know, on a particular day. It's always difficult. We spend a lot of time getting the quarterly demand trend, so to say on a particular day will be difficult. But yes, we have this sense that there is a huge positive sentiment this time. I think it has probably got to do with what happened during the monetization, the latent demand, and the fact that the international price has run ahead of the Indian price, or Indian price has lagged behind the international price because of the rupee appreciation. So that's an opportunity for people. And while, yes, the stock markets have done well, I think they are at levels where if your risk appetite is not high, probably you would consider gold to be a more preferred asset class. So that also, in a sense, adds to the glitter of gold during the season. So I think in all sense, when we interacted across, even in other regions, I think there is a positive sentiment, and there's a sense of optimism. It's also a window where I think for the first time, barring Dhanteras period, the last 1.5 years, the trade has been having a challenging period, right from strike and then the PAN card adjustment and then the demonetization and then the income disclosures, all kinds of things. Barring Dhanteras, they've had a rough time, and think it's all coming back now.
Well, the positive sentiment definitely is music to the ears. Mr. Kothari, coming back to you, as Som as well pointed out, that there have been all this cashless theme, PAN card being made mandatory, the hallmarking being made mandatory as well. Has that in any sense impacted the retail buying today?
No, I don't think so.
Okay.
Now it's all over, because mainly it's buying from the rural area side is a huge buying of theirs. What they are saving, they are invested in the gold in a little small quantity. It's compared to the less than 2 lakhs rupee.
Sure.
So I think now it's over. If you see the data of last month and its current month also, if you see the 80, 90, 70 to 80 tons should be there. So I don't think so it's happened. Now it's all over. The demonetization is over. But mainly gold is buying in the rural area or maybe tier 2, tier 3 city. So that doesn't affect anything more.
Mr. Kothari, would you also say that, I was talking to some people and they said the buying this time around is going to be quite strong because people do not want to get into that buying period once the GST comes, because they don't know how the markets would react. Have you seen that sentiment as well prevail?
But it's GST is coming, but it's over. There is no customs duty should be the changes, but it changes in in a couple of years, so slowly. So I don't think it's a effect on the market prices, because GST we are just talking with that is 12 to 13% should be there, including customs duty. So I don't think that any price effect on this GST is.
All right.
So people are again buying and buying again and buying. If something had happened that customs should be dropped down to 10 to 4% or maybe 6%, then imports should be dropped down. People are waiting for the customs duty. That's happened.
Yeah, that point is well taken. So I'm coming to you, and there is so many ways to spend money, or rather invest in gold today, right from physical bars and coins to jewelry to ETFs to sovereign gold bond scheme as well. And that's really something that many of the experts and analysts have been recommending. What is your sense? Is the market really thinking about physical and paper gold this time, or do you think the Indian sentiment about tradition and religion would really prevail?
Well, we have always said that, sovereign gold bond increases consumer options, and it is good. A consumer who wants to invest in gold, if he gets a sovereign gold bond with 2.5% interest, yes, we would prefer it backed by gold. But as of now, it still attracts people with faith in gold. So it is a good consumer choice, and so is a coin, ETF, etc. If I were to look at it, I think sovereign gold bonds is more for people who would otherwise have invested in ETFs. It is not for those who would definitely go for physical gold. So to that extent, yes, it is another product. But if you see, I think these Akshaya Tritiya and Dhanteras during Diwali, it's more about simple jewelry, off-the-shelf jewelry, bars, coins. So it is, it's wide choice now.
It sure is, and physical buying does stand tall. So, and Mr. Kothari, thank you so much for bringing us that perspective. So that really is the view coming in from the industry. Physical buying has been good, much better than last year. The numbers, of course, are still difficult to talk about, but it's anywhere up by 20 to 40% is what the industry is looking at in sense of the footfalls. That, of course, is the kind of year-on-year returns that gold has given you in last 10 years, has been double-digit. In last 10 years, barring 3 years, it really has been quite positive. Anywhere between 10% to 33% on the higher side has been the kind of returns that we have seen come in from gold. Let's get another perspective as well, and Shamik Bose joins us to talk about that. Mr. Bose, hi, happy Akshaya Tritiya to you as well. What is your sense? Is it a good idea to buy gold today, and what kind of returns should one be looking at?
Thanks, Manisha. Centriol. Yes, I think you can always buy gold in every financial year, looking for a portfolio diversification which hedges inflation and which hedges erosion of money values. I'm in favor of putting in a certain amount of gold, depending on your risk profile, anywhere from 5 to 15%. If a person puts in about a sixth of their money in gold or silver, and they should treat it in the similar way as they do with land or real estate. Now, religious occasions, marriage occasions aside, I personally see gold over historically, other than the last 10 years, which you were showing the table just now on the screen. Gold historically absolves you of the erosion of your monetary strength. And I think looking at the interest rates people get these days from banks and from debt instruments, looking at real terms inflation, gold and silver, you should always use these occasions to put away some money in gold and silver.
But let's talk about the returns part of it as well. Where do you see the prices headed? With the way the world is, markets do anticipate some money would continue to stay in precious metals. Are you looking at 1,300 this year, 1,400 next year? I mean, that really seems to be the consensus building.
Manisha, I'm looking at the international geopolitical turmoil, looking at monetary turmoil, looking at negative interest rates, and looking at all the political situations you have playing out in Europe today, in America today, that they're all following, like Japan and China, mercantilist policies of, talking down their currencies. I'm a little surprised gold is not above 1320, because the dollar index has returned from about 103. And if the dollar continues to fall, which on its own, left to its own devices, it will fall, I expect gold to target last year's high at 1380 once again, and if it reaches that, towards 1525. But it needs a convergence of international events and currency cross pairings to achieve that.
Your point is well taken, Mr. Bose. We'll let you go at that. Thank you so much for joining us and giving us your view there. And with that, it's completely out of time on this edition of Closing Bell. Stay tuned for After the Bell coming up next.